What credit score do you need in order to get a loan? Well, it all depends. I'm Steve Clemens with the Clemens team and EXP, and I'm here today to talk to you about credit score. Many of you are wondering, I would really like to have a home, but I'm a little bit nervous and thinking that, well, in my financial situation, I just don't think it's possible. And some of you are thinking you just don't buy because you don't have a true understanding of what it takes to become a homeowner. So I'm here to tell you today, to give you a ballpark figure of what it is that you're going to need in relationship of credit score and how important that is to watch, to manage, and to stay on top of it. Getting your credit score up and in a great position is very, very important. Credit scores can range anywhere from 300 up to 850. The higher, the better, because the higher your number, it's telling your creditor that, or your bank, that you are less of a risk. And so it's very, very easy to watch your credit score and to maintain it than it is to basically screw it up and then have to come back and rebuild it. So we'll talk about that. Well, step one is to find out where you are. If you don't know where you are, you don't know where to start or anything. So find out where you are. So how do we do that? Well, you can go to a bank, a loan officer at a bank or a lender. And if you don't know any, then call us and we'll lead you to the right resource so that you can find out where you are, where to start. But you say, I don't have any credit at all. Oh my gosh. No credit is as bad as having bad credit. So the first step, if you got maybe bad credit or you have no credit at all, the first solution I would recommend is probably getting what we call a secured credit card. A secured credit card is a card that you can go to just any bank and basically you can put down 200, 500 bucks or whatever, and they'll help you through the process. And basically you're giving them the money, but you're showing, and they're going to give you a card that you can use every month, and then you can go and buy a tank of gas every month or whatever. If it's a $500 limit or $200 limit, then make sure that you are using a small amount of credit, paying it off every month, and then making sure that you keep a large available credit balance on there. Does that make sense? Credit availability. In other words, when the credit bureau looks at you, it's like you've got all of this available and you've only used this much. And so it looks like that you can handle your credit really, really well. That's how you do it. We were talking about loans the other day, and so what different loans require different credit scores. So if you have a conventional loan, to get the best rates, your credit score needs to be like 740 or above. When you are at 740 or above, you're going to get the lowest percentage of paying interest. And that's going to save you money in the long term. So when you work on your credit score, it pays you back over time. On conventional loans, it changes on the minimum. The minimum can be around 620, and actually that all depends recently, because when the pandemic hit, COVID hit back in 2020, it changed everything immediately. The banks were scared. People's credit score in order to get a loan jumped from 620 to up to 660. So it all depends, and it's all changing based on this pandemic. VA loans will be very similar to conventional loans. So, the higher your credit score, the better your rates. USDA or rural development loans, those that are zero down, those require like a 640 or you're even 660, you're more likely to get the approval of it. But those are available. And the last loan is the FHA loan. The FHA loan is basically there to help people with a lower credit score And with that lower credit score, you're still able to get into a home, which is better than the rent process. And the last thing I'd like to share today about your credit and your credit score is, number one, pay your bills on time, always. That helps you more than anything. The second thing is to avoid having any bill turned into collections. And this can happen especially with medical bills if you get sick or if you get laid off. And it's important. It can happen to any of us. But the thing is that you want to make sure that you call and talk to the whoever you owe, and just say, hey, I just lost my job, or I'm unable to make my payments right now. Is there any way I can make arrangements? And most of the time people will work with you. The third thing is to do not close any credit card account that you have. It's important because the longer those credit cards go, then it's the age of the account that actually helps you to have a higher score. So do not close any accounts. And the fourth item is to pay down that debt, and pay them down so that you don't pay one off, but pay all of them down so that you get more availability, because the credit bureau is looking at the availability that you have. So as you increase that each month, you're going to increase your credit score. And the fifth thing is to be responsible. Just, get on top of it. It's going to give you confidence. It's going to energize you and make you feel better about yourself. And the truth is that anyone can have a home. We live in the greatest country in the world, the richest country in the world, and all of us, even the poorest people that we have here in the U.S., you still have great opportunity. So to be a homeowner, anyone can do it here. Everything's in your favor.